Awesome, fantastic. Okay, so let's roll. We're going to be talking about trading. Just realize throughout this whole session today, trading does have risk involved. Never invest money that you can't afford to lose. We can get you all this information, but my session here is going to go by. I want to get done in 55 minutes, and I don't want to talk too fast, so I might skip over a couple intro things because I want to really get into the meat of this. Just realize, though, that this session is designed to help you determine whether or not you're looking to gain an advantage in your trading. We're going to primarily focus on futures, but listen to me loud and clear. I don't care what type of trading you guys do. The data and how we make decisions based off the data, it works in all markets, futures, stocks, ETFs, Forex, you name it. So I just want to make sure everybody knows that, but I will be using futures examples, and I'll go through a quick little crash course to make sure everybody's up to the same speed, okay? Thank you, by the way, Philip and Oren and Trish for the response, Jerry, Wayman. I appreciate all that. Looks like we're good to go. Okay, so let me give you guys a quick little background. I want to tell a 2-minute story about my background. I don't want to spend too much time in here, but it's important for you to understand why I'm even here chatting with you. Because my background's a little bit different than most of the people you might hear in a session like this, primarily because I did not grow up around trading at all. Like, I was an engineer for 11 years. That's what I did. I got 4 engineering degrees, got my master's degree. Before then, I served in the United States Army, non-commissioned officer. I did military intelligence. So I've really seen a lot of different things and been exposed to a lot in my life. I have stories for days. Then I finished all that up, and I started working as an engineer. And I was about 5 or so years in my engineering career, Ryan, and I just got to the point that, quite frankly, I just couldn't see myself doing it for the rest of my life. Probably like a lot of you, just a little bit restless. I didn't hate my job. So I had an idea, something I wanted to create, and I ended up starting up a business that my wife and I primarily worked on it on nights and weekends. We burned the candle at both ends of the stick. We had 3 kids while we were doing this. People thought we were crazy. But 6 years later, that business, that idea afforded us the opportunity to walk away from our corporate job. So she was a teacher, I was an engineer, and for the past several years, we've been entrepreneurs. And I love it. I love being able to control my time. Okay, so that's that. What does that have to do with trading? Well, a couple years after that, I started looking into other income streams. I just think it's smart. Whether you're working a full-time job, you have businesses, 3, 4, 5 streams of income is incredibly smart in today's day and age. Don't rely upon one thing. And so I started looking into trading for the first time. And everybody in here just realized I started off my trading in the Forex realm. Got trained up and mentored by some incredible people. Started doing that, and then I switched. And every time, here's the point. Every time I bring on something, I got myself educated. I found mentors, learned skill sets, leveraged systems, and keep building and building and building and building. So that's kind of the abbreviated version. And that's basically, where the NOFT team came into play. And I'll tell you a quick little story about the NOFT team and what they do and who they are, because generally speaking, all of us that are in here, we are all what's called retail traders. There's a challenge there when it comes to trading in any market, and that challenge is trying to understand what the institutions are doing, the financial institutions. If you've ever traded, and you've probably heard that the institutions drive the market. They're like 90%, some people say 80, some people say 95, whatever. Well, there were a handful of individuals, people that actually came from that professional trading world. And as they transition out of it, okay, they realized they had a huge advantage. Okay, oh, look at that, Wayman, that's good stuff to know. Electrical engineer, thank you for letting me know that. And, wife is a teacher, original wife. So what they realized is that you and I as retail traders, they said, well, they had a big advantage. And I could go on, and we could spend another 10 minutes talking about all the advantages of what the institution traders have over the retail traders. But the thing that's changed here is data. Like, we all know we have phones and we have cloud services and data and all these things that we can get on our phones now. And for the past 5, 6 years, data has been changing the game of trading. And so leveraging today's the ability to collect that data, they actually developed an idea. And that idea was to create a way of looking at the market and a state-of-the-art analytical ability to look at the market and trade it using the data that the institutions have done it for years. Now, while doing this, they actually found that a good number of the retail traders like you and I, we actually have an understanding of market structure, footprints, even some order flow. However, order flow sequence tracking was entirely missing from the equation. You might want to write that down. If you are taking notes, OFST is an abbreviation, and that's what we're going to be spending our time on. And basically, that's where the Project NOFT was launched. They said, okay, can we make this happen for retail traders? And they did. And the idea, the mission was this, to take the institutional mindset, combine it with that order flow sequencing. They created a tool. We'll use it on NinjaTrader today. You can use it on TradeStation or whatever, and provide retail traders the ability to look at the market and trade it how the institutions are trading it. And Renee said earlier when we were launching, hunting and stalking institutions, watching what they do, making decisions as they make decisions, and looking at that data real time, and not doing indicators and lagging price indicators, and we'll get all into all that. And so at the forefront in teaching this is a gentleman right here, a gentleman by the name of Troy Epperson. You may know the guy. As you continue to go throughout your journey, if this is something you endeavor upon, you're going to get to know him personally. He will be working with you live. And I just want to send a little statement out there. I know a lot of you are in for the long run and you're looking at different programs today. Can I just give you my honest thought process? Systems are great, tools are great. If anything you look at to purchase or get involved with, if they do two things. Number one, provide a guarantee. And number two, actually do it with you. Can we all agree? Give me a yes if you can all agree. That's probably not a place where we want to just invest too much money or time. I just want to be straight up, because we live in the day and world. There's a lot of gimmicky stuff. Just make sure whatever you guys look to get into, make sure they'll provide you a guarantee and they'll provide you the mentorship alongside with that. Is that fair? Good. Thank you. I appreciate that. Robert, thank you. John, Diana, Julio, got you. Thanks for the response. And Mario, good. Okay, let's roll. Let's get into this. All right. Now, I want to ask you guys in here. Yeah, we definitely will do that, Peter. I want to ask you guys in here, what are your trading experiences? Just give me a quick little response on a scale of 1 to 10, if you were able to rate it. Your knowledge, experience, and results. Type it in, 1 to 10. 1 means you know little to nothing about it. 10 means that you're consistently making $500,000 a year. Just give me an honest answer. Nobody else is going to see it. You don't have to try to impress me. I'm not here to judge you. I just want to get an idea. Okay. Okay, Peter, thank you for that. Appreciate that. And Jerry, thanks for the response. JJ, okay, I got some 2s. Looks like there's a little bit of a lag. That's good to know. It's like a 3 or 4 second lag. Okay, some 1s. I see a 6. JJ, thank you. Appreciate that. A couple advanced traders in here, not too many. A lot of 2s and 3s. Interesting. Mark says a 10. Wow. Okay, good. So even if you're doing that, what we're going to look at today is, again, learning how to get in earlier and get out at the right times based off of live data. Gloria is a 1. Okay, good to know. Robert, I got you now with a 3. Good to know. So I got about 50% of the people in here are fairly new. That's the sort of stuff that I need to know. I appreciate that. It's very, very helpful for me. So thank you. Okay, I got a couple other 7s. I got an 8. All right. So here's the thing. Here's my promise. I have a short amount of time here, but by the time I'm done, those of you, actually, you know what? Let me ask another question. What are you primarily trading? Just Forex, futures, stocks, ETFs. What are you guys primarily trading? And then do like comma, yes or no. Is it your primary stream of income? Like, it doesn't have to be your only stream of income, and most of us is not, but is it your primary, like the number one that drives everything else? Let me kind of see what type. Okay, lots of stocks traders in here. That's good. Okay, so Peters does some futures, the NASDAQ, okay. Okay, non-primary stream of income, that's fine. Again, it gives me an idea. We got some professionals in here. We got some people that are fairly new. And just realize that now that I'm aware of that, it lets me know that I may have to slow down in some areas. And if you guys are a little bit more advanced, give me some grace as I slow down in some areas and do some elementary talk in some areas, okay? Options on equities, stock options. Okay, good. So here's what you're going to do. By the time I'm done here, if you don't have any experience with futures, I'll give you like a 4 to 5 minute crash course. I'm not going to spend a lot of time on that. We don't have time. But more importantly, you're going to looking to see and understand how you can gain an advantage. Okay, Nicholas is a Forex trader. Understand how you can gain an advantage over all the retail traders by learning to trade with the institutions, not against them. So let me give you guys a quick crash course, because when I was shifting from Forex over to futures, I remember looking up stuff and I would watch videos and ask people, and everybody seemed to confuse it. Like, I knew how to trade already, I just didn't know what it looked like to trade futures. And it took me forever, and I've actually dumbed it down, and I'll just give you guys a real quick run through of like what you're doing when you're trading futures and why. Because to me, once we get into the data, we start making decisions based off of data. I don't care what market you're looking at. I'm just going to make my example, and I want you guys all to understand the lingo here. Futures contracts is trading contracts, okay? buying and selling standardized contracts that are used for trading future goods at a certain date and certain price. What does that mean? What that basically means is that it's a variety of different things, but we trade contracts that contain like stocks in them, for example. Okay, let me give you an example. Assume, and it's very, very versatile, assume that you you bought a house and you need to get internet service at that house. And you have somebody comes by your house, which happens to our place a lot, and they come by your house and they want to sell you internet service. And they say, hey, we got this deal where it's $50 a month, but in order to get that $50 a month deal for your internet service, you have to sign a 12-month contract. Okay, so effectively, you're buying $600 of internet service for a year. It's a contract. Now, imagine if you had the ability to, let's just say the price of internet service is way high in the rest of your neighborhood, and you have this contract and everybody else is paying $100 a month. What if you had the ability to walk across the street and sell that contract to your neighbor for, say, $80, and you make a profit from it? That's essentially what you're doing when you're trading futures. It's the contract, okay? It is the contract, not the product itself, okay? Okay, Boy says, it took me ages to find a way to message. Yeah, it's a chat box in there. Sorry about that. I did a little intro earlier. Listen, it's the contract, not the product itself, that can be bought and sold in the futures market. There's always a buyer. There's always a seller. As the supply and demand of those goods rise and fall, we just simply make money based off our knowledge of daily market price movements. And that's where it all kind of gets the same. And we can go over example after example, and I could spend a lot of time talking about the why behind it. If I had an hour and a half, I would. But I'll just say this, if you haven't looked into it, if you're looking for leverage, it's one of those things you can leverage very well. If you have $2,000, instead of buying 10 stocks for $2,000, maybe Apple stock, a little bit higher than that, and then if the price goes up by $10, you sell those Apple stocks off, you make $10 times 10 shares, and you make $100. Well, if you did that same investment, that $2,000 investment, and you bought a futures contract with Apple, well, in that contract, you'd have 100 shares. And that same $2,000 gets you access to the 100 shares. So if that same $2,000, the price of Apple goes up by $10, you net profit 1,000 versus 100. And that's called leverage. And there's risk involved, and we'll talk about why risk is involved and everything. So let me just kind of shift gears, and let me just show you real quick, because every single one of you, one way, shape, or form, has looked at a chart before. And I want to just kind of show you that I don't care what lingo we're using, and I'll show you some money opportunities and show you a little bit of future stuff, and then we'll get into the order flow. I plan to be there in like 5 minutes. I want to get to that quickly, okay? So I turn on a chart. Everybody in here has seen a chart, and you're going to see lots of charts today. Let me ask a quick question. Type in a no if you do not understand what a Japanese candlestick is. I do not think I should see any responses. And if there are, it's fine. You know what? I'll just explain it real quick because of the level of people. The Japanese candlesticks are a lagging indicator. They represent time that went by. These candlesticks that I have on the chart right now represent, I'll turn on an arrow here, they represent 30 minutes. So you can have them represent an hour, 4 hours, a day, a month, a year, it doesn't matter. So for instance, yesterday, so the market's not open right now, it's a Saturday. Yesterday at about 11:30 a.m., the market opened up at this price point right here at the top of this red one. Then throughout the next hour, it rallied up. This is called a candlestick wick. Dipped down from the low, rallied up, ended up closing out right there. Next 30 minutes, open, dip, rally, close, open, dip, rally, close. So again, this could be a Forex chart. This could be a stock chart. It's a futures chart. The only thing is you look up here at the top left, and it says ES0319. All that is a symbol that represents what you're actually trading. And I got a few examples of some of them. People go, well, how much does it take to trade? How much money can I make? The only thing that's different to me, like if you're trading stocks, you typically talk in terms of points. If you're trading Forex, you typically talk in terms of pips. Here in futures, you typically talk in terms of ticks. Like a tick is a fraction of a point. And every time that contract we were just looking at was the ES, so that's the S&P 500. And so there's lots of resources out there. And again, I don't have time to get into all this. If you want to go do some Google searches, you do not need to go to these websites that I get. I'm not promoting these websites, but hey, this is one. If you want to trade indices, you can come over here and say, all right, here's the S&P, there's the symbol, here's how much money it costs to trade with it, Here's how much money I'd make per tick or per point, and it's all there. The only reason I show you this because I want you to guys know that some contracts move very fast and are very profitable, and therefore they take more money to get in. You can see over here on the right-hand side, $6,600. Well, you might be saying they're going like, well, I don't have huge accounts where I can throw $6,600 around. I got it. Maybe it makes more sense for you to trade corn or the euro dollar. It's the same thing, still very high leverage. Those just don't move as fast, so they're not always as profitable. And that's kind of one of the benefits because you can play in the game and not have to play big. You can play small, okay? So I'll give you an example, and then we'll shift gears and go into order flow, okay? So if I bring back up that chart, yesterday at noon, right? Something happened. Maybe you're looking at this and you see you're a trend line trader or a counter trend line trader, or you might be even like, a candlestick formation trader, and you say, okay, well, I draw my trend lines a certain way. Just for argument's sake, let's just say it was something like this, not a perfect trend line. And you decided you want to get into that trade buying. Well, there's two things that happen here. One is you would have to actually wait for the market to come all the way up to the top of this green candlestick, that one to close out, and then you can get in and take this for a ride. You miss out on all of this opportunity. That's what we're going to look at today. That's what we're going to trade today, okay? We're going to look at getting in earlier because we're going to see what's actually happening live inside that candlestick. But let me just kind of give you an example. Let's just say you got in here, and I'm going to do even numbers just for argument's sake. This is 26.88. I'll write it down. And so you make a buy, trade, or go long, and you hold on to that trade, and let's just say you got out right before the day ended, and you max it out at 27.08, just for argument's sake. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is 5 hours. 5 hours of movement. Let me show you why people typically trade the ES on a futures contract. Remember, 5 hours of movement. I'm going to come over here. There's lots of different types of calculators out there, futures calculators. This is why you don't have to try to do all the math. You go, well, I want to trade crude oil. Crude, you just type it in, crude oil pops up. It gives you all the numbers there. I want to trade the S&P, and there it is right there, the E-mini. So if I come over here and I say, all right, well, I'm looking at a trade, and that's 26.88 is my entry point. Get rid of that zero there. And I got over here, 27.08. And I trade one contract. So I put $6,600 as margin into that trade. Calculate. Can you guys give me a yes? Letting me know that can you see that as a $1,000 net profit, it jumped by 20 points, which is 80 ticks, $1,000 net profit in 5 hours. Okay. In the ES, this is not unrealistic. This happens almost every single day. And that's why something like this might cost a little bit more, because if in 3 hours, I see trades sometimes in 2 hours go $800 to $1,400 in 2 hours. So again, and yes, you want to make sure you have proper risk management. We'll talk about that in a bit. But so the point behind this is, I don't care what you're trading. You could trade Forex, what we're about to get into. You could trade Forex and do pips. You could trade stocks. You could do ETFs, futures, doesn't matter, because we're about to look at the data a little bit different. That was just kind of a quick little, when I start saying things like ticks and contracts, I just want you guys to know what I mean, because once you get into the chart, trading is trading is trading is trading. Yep. Waiting and not trading is important. Says timing is key. Yep, exactly. David says, talk about what you lose. Amen, because you can lose just as much. We're going to talk about risk. We're going to talk about setting up 5-to-1 reward risk ratios and why we would do that. All right, so now I want to find out, what are you guys currently using when you place trades? What methodologies? Just type it in, Fibonacci's, trend lines, candlestick formations, moving averages, supply and demand, you name it. Just there's all kinds of things, Bollinger Bands and support and resistance. People tend to use all kinds of different things. I just want to get a feel for what you guys and ladies have been experienced with so far. And maybe if you're not getting results, if you're a little bit frustrated with what you've been doing, let me know that as well. If you feel like you're getting pretty good results, you can let me know that. I'm not looking to change any of that. And I'll say that again. If you have found something that works for you and you found some success in that, keep it, stay with it. What we're about to get into is taking the information you have already, and those are all lagging price indicators, okay? Yeah, the super DOM, okay, moving average, they're all lagging price indicators. Well, 90% of what you're typing out there, lagging price indicators. A lagging price indicator is making decisions on has happened versus what is happening. And sometimes the best case scenario, we can get in, 7, 10 ticks behind everybody else or behind the institutions because we don't have enough information and we have to wait for like a lagging price indicator to give us confirmation. And this is rampant. So if you're already trading something that works and you know your entry points, well, you're going to see here how once you make the decisions based off of your information, you can come over here, see how the data looks, and you can get in early and you can get out at the right time because you're going to actually be able to look inside the candlestick and see what's happening inside the candlestick and make decisions from inside the candlestick, okay? Inside the candlestick. Yeah, CS, certainly we can do that. You're talking about those websites. Those websites, by the way, those were not websites. We're not promoting that. I just did a Google search and brought up. One of them was Daniel's Trading. The other one's barchart.com, okay? You check them out. So now let's go get into the order flow stuff because this is where the game kind of changes. Some of you have looked at data like this. Some of you have not. So we're going to take these candlesticks right here, and we're going to look at it a little bit differently. We're going to look at something called a market footprint. Now, obviously, the market is closed now, but I also made it a smaller time frame because I want you guys to see the type of movement that exists on a smaller time frame. So let me just kind of explain. If nobody's ever seen this, if some of you have never seen a market footprint, let me just kind of explain what you're looking at here. And this is how we're going to look at the data. But all that data there, it can be very, very overwhelming if you don't know what it represents. So this is a good example right here. Can you guys see that this is actually a candlestick? Again, I got a 7-minute time frame. We could do this on 30-minute time frames. If you're a swing trader, you can leverage this. If you're a day trader, you can leverage this. Probably not real good for position traders. Definitely scalping 100%. Okay, we're talking 5 hours or less. But this is a candlestick, and inside there's a whole bunch of numbers. There's a whole bunch of, these are actually orders. Somebody asked me about the Super Dom, okay? These footprints are a combination of the time and sales and the Super Dom, and it puts, if you don't know what that is, don't worry, it puts all that information together and creates what's called a market footprint. And all these numbers represent orders, okay? I'm talking layman's terms. They represent orders that are being placed, okay? So all the orders, you and I, we buy, sell, we buy at the ask price, we sell at the bid price, or vice versa. We are, right? We're making orders, we're placing them left and right. Also, at the same time, the institutions are also placing orders at the same time. So all these institutions, all of us traders, we're all placing orders, and that's what this basically calculates. On the left-hand side are orders placed at the bid price, and on the right-hand side are orders placed at the ask price. Now, if you don't know what that means, don't worry about that, because as a Forex trader for years, I didn't look at that for a long time, but it's what the data represents. A better way to look at it as we dig into this, and this is something that you can definitely take a note on, is the left-hand side. You might want to write this down. The left-hand side represents aggressive sellers, and the right-hand side, did I say left? I think I said left. The left-hand side represents aggressive sellers. The right-hand side represents aggressive buyers. You know when you say something, you thought you said it, you may have said the wrong word. Left is aggressive sellers, right is aggressive buyers. Why is aggressiveness so important? You can see these are candlesticks. You see the wicks here. You see the candlestick body there, just like we were looking at before. I'm going to talk through some information here about aggressiveness, because knowing whether the institutions are gaining aggressiveness, losing aggressiveness, gaining momentum, and losing momentum, we can actually determine that from the number of orders that are placed. And it's very, very, very accurate because it's real time. And we're not making decisions based off of indicators. We're making decisions based off of actual data that's occurring right now. Let me explain to you what I mean by aggressiveness. This is for you non-traders here, or traders if you never heard about this. A really good example, not take into account trading, but I'll relate it back because everybody knows about selling houses. Let's just say you went to go sell your house. You're the seller, and you listed out there, which is called the ask price. You listed out there for $400,000. And you know what? Maybe you got out there and you got a buyer that comes along. Let's call him Bubba. Bubba comes along and he says, you know what, I like your house, but I know I'm going to need to do some work on it, so I'll offer you, or I'll bid, for traders, I'll bid $300,000. Well, if you're a seller there and you're not in a rush to sell for whatever reason, you're just kind of, if you're waiting for the market to come to you, you're what's called a passive seller. Now, let's relate this back to trading. This is how many of you out there, type it in me if you've set up like you would call a limit order, and you set up a line on the chart and you told yourself, okay, if the market comes up to this level, then and only then I will look to potentially short the market or sell, whatever it is. So you're waiting for it to come to you. You're waiting for it to get to a line of resistance, or maybe a Fibonacci or something like that. Type it in me if you've actually done that before, okay? Love it, okay. Good, so yeah, D says, how do we access the footprint? That's what we're gonna talk about, the software and things today, okay? So yeah, it's what we do. When we do that, we are what's called passive traders, passive sellers. Now, if that buyer doesn't make a move and he decides, if Bubba decides to wait too, he's a passive buyer. So you have a whole bunch of, let me ask this question. This is a very simple, there's no trick question here, no trick, whatever, what's it called, trick question. If you have a whole bunch of passive buyers and a whole bunch of passive sellers, what do you think is going to happen to the market? Take your best guess. What do you think the candlesticks will look like? What do you think the charts will look like if you have a whole bunch of passive buyers and a whole bunch of passive sellers? Yep. Yeah. Okay. So yeah, boards already uses market orders. Good. You have a sideways movement, and some people call it, depending on your school of thought, you might call it consolidation, sideways, ranging, flat market, whatever you want to call it. I don't care what the name is. You have nothing much happening. So in order to get the market moving, somebody has to make a move. And if you and I, as retail traders, we only control 5 to 10% of the market, we can't move the market. But the institutions can. The banks can. The financial institutions can. And they know things that you and I don't know. They have access to information. They have way more money. They have lots of resources that you and I, as basic retail traders, don't have. So when they make a move, we want to know what they're doing, and we can actually see it on the charts. Let me give you an example here, okay? We can see it on the charts. So if you're that seller and you list it and you list it at $400,000, let's just say you have a buyer that comes along, and maybe he has a brother-in-law that owns a construction company or a development company, and he found out that the area that you're selling your house in is getting ready to go through a huge development, and then in the next 3 to 4 years, the value of that house is going to skyrocket based off of that buyer's estimates, because he has some insider information. And if you don't know that information, he bids $400,000, you say deal, he is what's called an aggressive buyer. This happens. This is what the institutions do. They know information. They know things that are happening. They have access to more, and they start making moves. You start seeing those orders change. You start seeing aggressiveness die down in one direction. Same thing on the other hand, okay? Same thing on the other hand. If you have a seller, or so if you're selling your house and somebody comes along and they said, and let's just say that you found out at your homeowners association meeting the other day that they're getting ready to build a jail cell across the street from your community. You and I both know, all know, that the value of that house is going to go down over the next couple of years. So you want to get out of it now. You're willing to take a lower price. Therefore, you're an aggressive seller. This concept is instrumental in what we're about to get ready, in what we're getting ready to do, because you have to understand what's happening behind the scenes, and because the numbers are going to be the numbers they represent, but the changing of aggressiveness is what drives the market. Is everybody on the same page with me so far? Just give me the letter Y for yes, or M for me, whatever you, just something. Just give me a nod or something like that. Is this making sense? Okay. So the ultimate thing is we're looking to watch for the aggressiveness and the change in the market, but we're going to look at it through live data and the actual number of orders that are being placed. Okay? Good. Let me grab a quick drink of water, and then we'll go back to the market, and we'll start making decisions based off this information. It's pretty exciting. All right, so back to the chart. So here we are. We're looking at this chart. Now, of course, today's a Saturday. The market's closed, so I can't give you a live example now, but I could certainly talk about what's set up for the next week. But let's just kind of look through this, and once you start looking at these numbers, the numbers aren't what's important. It's what the numbers represent. The numbers represent something, and they actually move in orders, and they move in flows, and you can actually watch and track what those flows are. And so what we've done here, and this is kind of what we're looking into. This is what Troy and his team has done for over 10 years now. Okay, they are actually looking at the data and watching how the data moves. And there's a step-by-step process. So you're looking to place a trade. Let's eliminate all Fibonacci's. Let's eliminate all trend lines. Let's eliminate all moving averages. Now, again, if you have those levels and you're getting ready to place a trade there, you would use this to confirm that and to get in 7 to 10 ticks earlier and get out at the proper times based off the same information. So here are our trade conditions. Number one thing we want to look for. We want to look on the chart and see, is the current price of that contract, currency pair, stock, whatever, is it undervalued or overvalued? Is it cheap or expensive? We need to know that information first. And again, with the data and the supply and demand and everything like this, you can simply go in and you can put, it's called a VAP. It's a value at price. I'll just kind of squeeze this down. I'm going to look at that one exact move. Again, this isn't like from 4 years ago. I'm not giving you like the most amazing example. I'm just going to show you what's real right now, okay? I don't want to go back all the way till 2 weeks ago and show you some amazing move to impress you. I'm just going to show you what it is. You know, it might be beautiful. It might be okay. It's just real. Here's how we make decisions. So the first thing we're going to do, CS, is we're going to turn on the value at price, okay? It's a plot. And that plot is basically telling us, let me just kind of get everything all lined up here. That plot is basically telling us, let me get this numbers down here. Over on the right-hand side, I'm going to line it up here. Over on the right-hand side, we are seeing there's this plot. You got blue at the top here, orange at the bottom, and blue down here. Now, currently I have it set up for about an 8-hour movement, okay? So if I were to go way back again, you'd see that plot move. So what this is doing, it's looking at the value. It's taking the supply and demand. It's taking all the time and sales, and it's looking at the actual value of that currency pair or of that contract. And it's saying, okay, if it's high, it's going to paint that area blue. So it's cheap. I'm sorry, it's expensive. And something's expensive, you tend to want to sell. If it's cheap, it's going to be down in this blue area, and you're going to look to make a buy trade. But more importantly than that, if it's fair market value based off the last 8 hours, or I could do 2 hours, or I can do 24 hours, whatever, you can do it dynamically if you want to. If it's in this orange area, you are going to stay out. Now, I know I have some veteran traders in here. All of you that have actually placed a trade, let me know if you can agree with this statement. That I don't care what's going on and how sexy it looks, that I would rather be out of a trade wishing that I were in than in a trade wishing that I were out. How many can give me a big old amen, hallelujah, preacher brother, something like that? I mean, you know, we've all done it. Oh man, I totally knew that was going to go up, and we fish stories. I'd rather be telling fish stories about what I coulda, shoulda, woulda done than telling stories about how much I lost and I can't get out of a trade, right? and we've all been there. And if you haven't been there, just wait. It's going to happen. You know, it's part of learning how to become a better trader. You gotta suffer some school of hard knocks every now and then. Michael, thank you. Suzanne, I got you. So if it's in this orange area, so if this was live right here, no matter how good it looks, no matter how many beautiful, you know, entry points you get, you are going to stay out of that trade. I don't care what you're looking at. Stay out when it's in the orange zone. So what this does, it keeps you in the right area. Okay, so check the box. Good. Okay. Now, once we're good and we determine, let's just say down, for example, right here, let's just say we were looking down here live, or we can come up here and look at what's happening next. Okay, we'll look at both of them. We're looking down here and say, okay, yeah, we're in the blue zone down here. Okay. So they're actually orders, Vincento. They're orders. Now I want to know, is the market near any what's called an institutional trade level? Institutional trade level. Now, these are not like, these are things that the NOFT team is kind of leverage and use. Institutional trade levels, if you were to go to a chart, and actually Troy does this, and he actually populates these on a regular basis in the charts for you. And he goes in and he finds, okay, well, where's all the daily Fibonacci levels? Where are all your support and resistance lines? And then on top of that, where are areas, because he was an institutional trader for 10 years, where are areas that all of his data, 10 years of data, where institutions typically like to make moves in? Ultimately, those may end up becoming support resistance, but it's all mapped out there. And we just want to know all those areas where there's movement, and we're gonna impose them or put them onto this chart. And obviously, the line is going to be much farther away, so I'm going to turn on trade levels. And all right, so can you guys see now we got blue lines? Those are the same exact blue lines I had on that last 4-hour chart. So if we're looking to walk through a checklist and we're down in that blue area and that's our buy zone, so we check the box from the blue area, good. And then we want to look and say, are we within, typically we say about 7 to 10 ticks away from one of those blue lines. We need to be near one of those blue lines. If your current opportunity is out in the middle between two blue lines like this, you're going to choose to stay out of the trade. Does that make sense? That's all you need to really know. So we want to be near those areas because those areas are areas of reversals and movement, and we want to be near them within about 7 to 10 ticks or 7 to 10 pips if you're a Forex trader. Same thing, okay? So in this example, I don't care whether you're over here, over here. Over here, if we were down here, that would be pretty good. That would be pretty good. Everything else, you would stay away. All right, let's see if this area or this area was a potential entry point. So boom. Now, the third thing, and then up here, same thing. So if we're looking to reverse, right, and we want to reverse, and we're saying, okay, well, current live market, well, if we're looking at this one, live market, oh, here we are. If we see other indicators, yes, we're in the blue area, and yes, we're near one of those blue lines. Okay, so that's what we look at, current live market. There it is right there, okay? Let's go back here, squeeze this guy down. It's going to update because it goes back a couple hours, and when that updates, I'll let it rock. There it is, okay. So now the third thing, oops, sorry about that. Third thing we want to find out is we want to know, is the commitment of traders in the correct zone? A commitment of traders, it's a terminology that NOFT kind of created, and what it basically is saying, commitment of traders, let me open up these numbers so you can see. I'll turn on the indicator and I'll explain it here. I want you to actually see the numbers. I'll turn it on here first so it makes a little bit more sense. Show caught. Now, there's a lot of other things that we can show in here. We can do exhaustion alerts, momentum we can look at. One of the ones that traders really like to look at is called trapped trades. Trapped trades where basically you can identify when traders can't get out of trades. That's a good thing to know. You can look at momentum, exhaustion, it's all there, but I'm just going to look at a few here. I'm looking at the commitment of traders. Commitment of traders is based off the number of orders that are actually placed. Again, you don't have to memorize what it's all placed off of. We just need to make decisions. You guys see down here? Let me see. Your screens might be small. Let me zoom in here. There you go. So if I'm looking at this one, can you guys see that this 4980 and 4320, if you were to add those two numbers up, it'd give you about 9,000 something orders. Do you notice that those two together are more than any other two added together? It's and every candlestick has one. It's where the most number of orders are actually placed. Where the most number of orders are actually placed. Okay? So what they did is they basically, no, not commitment of traders. I was talking about something else. Sorry about that, James. I was talking about something else. I was talking about some of the institutional trade levels, and they call them homework levels and things like that. Okay. Now, the reason why that's important, if I've got a red candlestick, or orange on the screen here, if I got a red candlestick and I'm looking to potentially get in for a buy trade, and I'm looking at a reversal down there, I want to make sure that that commitment of traders, that the most number of orders are in the bottom half of the candlestick. Now, if I'm at the top and I'm looking to reverse, I'm looking at a green candlestick and I want it to be in the top half. Why is that important? Why would it be important if I'm looking to make a trade here? Why do I want that in the bottom half? Because as that candlestick closes out, we want to know where were the most amount of orders and is it relevant? Because if the most amount of orders are toward the top of the candlestick, the data is not relevant. It's not up to date, if you will. It's not what's happening right now. So again, we're making live real-time decisions here based off of real data. These I haven't even, we're highlighting things, but I'm not turning on any Q indicators. I'm not making any arrows go up. I'm not turning on some kind of, momentum calculator. I'm just looking at the data. Okay? I'm just looking at the data. Wayman, yeah, you misunderstood me. I said on the left side was sellers, on the right side was buyers. That's what I corrected myself because I was talking about something. On the left side, the number is sellers, aggressive sellers. On the right side is buyers. Okay? Now, if I know that and I see this in the bottom half, I check the box and I say, okay, now I have three conditions. These are my 3 setup conditions before placing a trade. Doesn't mean we're going to place a trade. Now, as you become more proficient in this, you might say, you know what, I don't care about that institutional trade level. You know, you're 6 months down the road, you got a lot of experience, you're getting 80% results. You say, you know what, I'm not going to worry about that. I'm only going to look at number 1 and number 3. That's up to you. But when you're new at this, please do me a favor and just follow through the checklist. That's why traders get in trouble, because they start trading emotionally. They see things and their mind starts making up things for them. So number 4, and this is going to be our entry point, Marcus. Our entry point is going to look for what's called a sequential decline. And this is where the aggressiveness quotient comes in. There's other indicators that determine aggression. This is where we are going to make a buy trade based off of one simple thing. Now remember, earlier we talked about getting in, right? We talked about getting in after the candlestick closes. So we're over here like 12:30 getting in. Notice 12:30 is way over here on the right somewhere. You're probably talking several $100s between those two, or at least $200–300 between those two. So I'm going to turn on the sequential decline, and it's going to highlight. It's called a dynamic reversal alert. Okay, it's called a dynamic reversal alert, and we're going to now look for. And I'm going to squeeze it down here so you can see everything a little bit easier. I want you to see all the different indicators pop up. I want you to see them all on the same page. Okay. Let me squeeze that guy down there. If you look closely here, you'll see inside that green box. So green means, you know, what it is if you look closely, it might be a little small. Can you guys see that it's 4980 and then it declines to 3238, then it declines to 1188, and then it declines to 443? And this one that's highlighted, it's a decline. The numbers are decreasing. And these red ones right here, it's declining, right? Those are sequential declines. Let's go back to that aggressiveness thing. So what's happening here? The institutions, which are the most number of those, a lot of orders in there, right? And it's right on top of that commitment of traders. Those institutions are slowly starting to care less about selling, and they actually are they're losing aggression in the going down. And that aggression, it's turning, right? And we're now starting to say, oh my gosh, okay, something's going to shift, something's going to change. And when we get into trade, here's how we would get into trade. Once everything lines up, we are in the right zone, we are near a blue line, we got our commitment of traders, and we see that sequential decline. Folks, we are in the trade as soon as this candlestick closes out. As soon as the candle, we're not going to wait all the way till 12:30 over here to get into trade, because you're too late. You miss out on all that opportunity. Now, somebody asked me earlier about risk to reward. How do we manage that? Here's what we're going to do with risk to reward, and here's why this is so unique. Because if we're wrong, which is going to happen, it's called trading. We're going to be wrong. Nothing is perfect. But if we're right, we get in this trade right here off this red candlestick. Okay, we have everything lined up. We're near an institutional trade level. We decide to get in. We get a decent fill. Right? Maybe you get in and wait to get in over here, or you know what, you don't want to get in down here because it's not a green one. You're going to set a stop loss. We're going to typically set stop losses 5 to 10 ticks below. We usually want to be on the other side of that blue line, and we're going to look for 5-to-1 plus reward to risk ratios. Why? Tiny stop losses, large reward. Here's why we want tiny stop losses, because if we're wrong, we are going to know almost immediately. Like, it is going to take us out quickly. And if you are a trader like I am, I want to know, okay, if I'm going to get taken out, I want to be taken out and not wait for 5 days or 5 hours or multiple candlesticks to go flopping up and down before I get out, because I want to be able to get back in. Do you understand this? Yes or no? So we want to create small stop losses, usually right below that blue line. That's usually about 5 to 7 ticks away. And then what we're going to do, okay? What we're going to do, so CS says, does the tool give you the signals, or do we highlight them manually? No, the tool gives us the signals. Yeah, the tool gives you the signal. It calculates all that for you. Everything on here right now, all it did was take the live data and it calculated it all for you. Now, again, I can calculate momentum, I can calculate exhaustion, I can calculate trap traders, I can ghost eye blocks, everything. So what happened is we would get in, set a small stop loss, and then as the market went up, this is the part right here. It says, manage a trade by watching imbalance alerts. As the market goes up, we're going to turn on another thing. The imbalance alerts allows us to identify, let me show sell imbalances. It allows us to identify that the bulls are still in control. So as long as you have more blue than you have red, this means what this blue and red means. The blue means that this side right here is at least 3 times greater than that side. 1 and 221, 7 and 0. Okay, the red means that the sellers are in control. And you manage that trade, and what we're going to teach you how to do is lock in profit. When the market makes its way up to this blue line right here, we're going to lock in profit. We're going to move our stop loss up, lock in that profit. So worst case scenario, we make a little bit of money. And then we're going to lock in profit again at every single blue line. We're going to lock in profit, lock in profit, lock in profit. So that's, we get in the mode of locking in profit. And again, doesn't matter if you're day trading this, if you're swing trading this, you lock in profit, you lock in profit, you lock in profit, okay? So the point behind this is, if you're wrong, we have a small stop loss, we get taken out quickly, and when we're right, or even when we're a little bit right, as soon as it hits one of those blue lines, we lock in profit, we lock in profit, we lock in profit. Now, if you're doing this on day trading, it's going to take a little bit longer to lock in profit, but we had locked in profit here after about 30 minutes. You made about $50 and about another, 40, 50, oh, actually, this is the whole movement right there. After about another 2-3 hours, you've now been able to lock in profit. And we said that was a $1,000 movement, but the reality behind it is you probably got in about $100 to $200 more because of all the data that you had. And that's all we're doing. We just simply do the same things over and over again, checklist, 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 manage a trade, checklist, 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 manage a trade, and we do it over and over and over again. It becomes second nature. And you get better at it and better at it. And you can see, and as you can see how simple it is, once you have the sequencing and once you have the data and how we can look at the data and identify the movements, as you start to go through the program and you start to see and evaluate whether this is going to work for you, regardless of whether you're going to triple your profits, that's not the point. It's about holistic information. We have to, in today's day and age, make better decisions. We have to stop just blindly trusting systems. I need to know what the data is saying, and the indicators just simply find out what it's saying a little bit faster, so I don't have to be Neo with the matrix, right? Look at just a bunch of numbers. Pretty awesome, right? Amazing. You see guys like Michael that says they're not indicators, they're market transparency tools. So therefore, they fit into everybody's trading style. In fact, you should slap on the Pringle slogan, once you OFST, you can't stop. Previously to owning the IES, my risk stops were the standard 15 to 20 ticks. Those are big stop losses, but now those have been easily reduced to 5 to 7 ticks. So his is a little bit lower, so he's gotten a little bit more confident. 5 to 7 ticks is a very small stop loss, locking in profit, and then the ebbs and flows of the market make absolute sense. They make absolute sense. So with all the tools, I just want to kind of ask a couple quick questions. I only have a couple minutes here. Let me ask you a question here, and I'm going to be very straightforward with you here. If you had all the tools I just demonstrated at your disposal, and I could teach you, or better yet, the NOFT team could teach you a skill set where you can leverage this, teach you a skill set where you can, let's just say, take a couple $1,000 investment trade, not go too crazy, and consistently, confidently, comfortably make several $1,000s month after month after month. Would you allow the NOFT team to train you, coach you, mentor you, guide you, give you the tools, give you all the software, all the tools, let you work live with us, let you trade live with us, and even provide you a guarantee on top of that, yes or no? Would you, let me rephrase that. If there were a guarantee associated with this where it made you more confident, would you give us 10% of your trust and let us earn the other 90 over the next several weeks, yes or no? That's a better way of saying it. Yeah, because again, it doesn't matter if you have other systems, other things that's working. This is more information, better information, right? Getting in better. Reginald, I got you. Sarah, I got you. Michael, Ryan, Christian, I got Aaron, Julia, and Michael. I have your phone number. I'm not sure what it is you're looking for. If you need me to give you a phone call, yeah, just let me know specifically what you're looking for. If you have a phone number you want to, or if you had a question you want to ask, just type your phone number in. That's fine. And at the core of the program here, Jessica, at the core of the program, we're going to train you on how to do this, to teach you the fundamentals of what you need to know to how to trade with the institutions. And again, it doesn't matter if you're using futures, Forex, stocks, ETFs. They're going to teach you all that, and they're going to teach you how to use the tool and then do it live with you. Because once you're a student, Borgie, once you're a student for the remainder of your life. There are no monthly subscriptions. There's no hidden cost. You invest in the program. You have access to it for the rest of your life. It never goes away. You have all the classes. If they add more classes and more videos, they'll update them to you. You have the live trading sessions. Every single week, you'll be working with Troy live. So this isn't just a, hey, here's a cute system, call us when you're rich. you're going to be working with Troy live. So you get to ask him questions and do trade examples every single week. More importantly, what's nice also, they also have some technical guys there because sometimes people don't know how to use software right. So after they install the software for you every week, twice a week, they'll do live tech webinars where they'll go over like how to set it up for swing trading, how to set it up for day trading, what are some of the tools, how do we use some of the tools, some of the things that I didn't go over today, okay? Some of the things I didn't go over today. And then they'll provide the software. And here's what's different because how many of you out there, this is so normal. Type it in me if any of you out there have actually bought a system. Let's just say you spent $1,000 on a system and it worked great for a few months. And then and then suddenly it stops working the way you expect it to work. But in order to make it start working again, you have to buy the quote unquote upgraded package. How many of you have experienced that? And that's another $300, $400, $500 for the upgrade. Yeah. And that, again, that's rampant. It happens. This is a lifetime access. The software is there as they add more. As NinjaTrader changes, they change along with it, and you have access to that for the remainder of your trading career. You'll have a 40-day blueprint, so you know exactly what to do every step of the way, training you, working with you, most profitable opportunities. Every day they email out a daily brief email, which gives you market options, what's going on in the market, some levels you might want to look to trade at, some areas you might want to trade. And for the first 6 months, this is only through the Webinar Expo, they're actually going to give you access to what's called the Advanced Mentorship Group. Now, this is not something normally with the program, and this is 6 months. You get to work with them live 5 days a week. You don't have to be there every day, but as often as you want, 5 days a week, Troy and his team live, trading, technical analysis, you have access to that. That's a special just for the Webinar Expo, and that's about a $2,900 value right there. So, and I know at this point in time, I get ready to wrap things down. At this point in time, most of you have already decided that this company and program is exactly what you need. Some of you have already typed in your phone numbers and asked me some questions. That's great. Here's the beautiful thing about the program. The NOFT team is so confident you'll be able to understand, implement, and profit from the methodology that they'll let you use the entire program for the next 2 weeks risk-free. That way, Sergio, you don't have to sit here in a webinar and take my word for it. You decide whether it's the right program for you. Because honestly, at the end of the day, the only person you really trust is yourself. All we ask is you give us an honest effort. Okay? So here's our webinar special. It's an $8,400 program, all the different pieces, a la carte, about $8,400. There is an online, if you were to go to the website, I'll show you the actual website. You can go here, you can go through all the program and all the details here. And at the bottom, $6,700. You're more than welcome. I can give you the link. You can buy it for $6,700. I don't have a problem with that. That's better for the company. But through the Webinar Expo, because of the promotion, what I'm going to do is allow everybody who's in here today to have an opportunity to come on board today for only $14.95. Sorry, $14.97. It's a one-day Webinar Expo special only. So it's very, very easy to get started. Or if you have any questions whatsoever, I'm going to recommend you type your telephone number into the question box. What I will do then is I will have an educational specialist reach out to you, spend as much time as necessary, make sure you're confident, make sure you're comfortable, make sure all your questions are answered, and then folks, you're off to the races. The only problem you'll have is that you didn't see this session 6 months ago and get started by then, because just the one movement today, that $1,000 movement, paid for over half of the program. That was just that one movement yesterday. And even if you got only half of that, 3-4 days of that, you paid for the entire program and you saved so much throughout the special. So I've got Dale, I got your phone number. Thank you, Fred. And if you guys have any questions, type your phone number in, type the question with it. Theodore, I got you. Catherine, I got you. Yes. Vincent says, does this work on Forex? Yes. I said that a little bit earlier. I'm happy to say it again. It works on Forex. It's called the Forex Alpha program. If you want to use it for Forex, type your phone number in, type in the word Forex with it. Okay, the 6 months of Advanced Mentorship Group is extra, and you're going to get it for free. That's about $1,200 of free enrollment there with your session today. Dwight, I've got you. Suzanne, I've got you. Joe, I've got you. Charlotte, I got you. $14.97 lifetime access, and there's no hidden cost or anything. So I'm going to wind down. I got a couple bits of information I want to get across to you guys. Fred, I got you. Diane, I got your response. Vincent, I got you. Good. Again, it's times like this where they do a Webinar Expo, and some of you say, well, I want to kind of hold off and wait for something. Great. Type your phone number in. You want to look at some of the other products. I get it. What this does, it says you were here during this session, you were here from 10 to 11, you got this information, you got this special, and it's only available for today, okay? Otherwise, it's going to be about $3,000 through other sessions. So this is not, though, for people that are looking to get rich quick. This is not for you. If you're not willing to work, if you're not willing to take some guidance, if you're not willing to follow some guidance, I am not here. I said that at the very beginning. I don't like hype games. I want to provide you guys some information. There's a guarantee alongside with it. If you have the program for 2 weeks and you decide you don't like it, these guys gave you a hype game, get your money back, go do something else. You have everything to lose, nothing to gain. And I don't even like saying that sort of stuff, but there's got to be a guarantee. When you look at data like this, you go, okay, I'm gonna give this a shot. So I got Jerry, Frank, John, I got your phone number as well. And I only have a little bit of time left. Normally what I would do is I'd walk through some of the additional details to let you know what you have lifetime access to, all the webinars, all the videos, all the classes, all the sessions. You have the software you have access to for the rest of your life, right? It's there. There's no upgrade fees. You have mentorship alongside with that, guidance and support. So for those of you still thinking about typing in a phone number, let me ask this question. Does the idea make sense to you? Like, does the idea make sense? Because the beautiful thing about the entire program is that you have everything you need to learn how to trade the market successfully, save time, and get an edge on like 90% of the traders out there. Believe me, folks. If I'm even half right, let's just say that I had to make up half what I just told you. It's 100% money back guarantee. If I'm wrong, you're going to find that out. You're smart people. You wouldn't be trading if you weren't. If I'm wrong, you go, these guys just gave me a line. Get your money back, go do something else. But if I'm right, Wayne, imagine the possibilities. So we're going to hold your hand every step of the way, ensuring you maximize your potential. There's so much upside, Wayne, very little downside for giving this a 2-week test drive. I said it before, I'll say it again. If you can't learn from the NOFT team how to leverage this type of information, you will not be able to learn from anybody else in the world. It's a pretty bold statement. So with that, I'm wrapped up. Again, I just want to give you guys a heads up, let you know what's available through the webinar special today. I'm going to leave this up while Renee does her transitions and everything. Thank you guys for the time. I'm glad I got an opportunity to chat with you guys real quick. We went through a lot of things fast. We had a very short period of time. If you got any questions whatsoever from this point on throughout the entire webinar, please do me a favor and make a note of this. Type your phone number in and type in NOFT, N-O-F-T, okay? What that says is like, hey, I have an interest and I want to talk to somebody, I have some questions, whatever it is.